Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be looking at the current market. Are we in a bull market? Are we in a bear market? I'm going to clear up one confusion that occurred from the previous video so that everybody's clear about what my view is and what my real perspective is on the current market. I'll also be looking at the current price movements that are occurring in this price range here and the kinds of things I've been tweeting over the last few days. But before I begin, the usual polite reminder, please remember everything in my video is always about my perspective, how I'm reading things, and shouldn't be taken as financial advice. Please do your wider research before you make any investment decisions. So with that out of the way, I'm going to start off with this daily chart here. And in my last video, I was talking about various scenarios and I'm just exploring the possibilities and probabilities because that's what I do here. I don't have a crystal ball. All I can do is read the price action, how it's developing, and come to some sort of a perspective in terms of where it possibly could go. And as you know, under the 46,000 mark, we're basically in a bear market. And this dominant trend I've been talking about for the last few months tells you that. It's very obvious. However, as good investors and traders, we need to know what the possibilities and probabilities are. So my cutoff point is always this 40,000. While we're below the 40,000, we're in this 12-month bear market. But once we get above the 46,000 mark, the narrative of this downward trend starts to shift because we're creating this consolidation here, and this could well be, and we have to be aware of the possibility that this is a reversal pattern. So once we get above the 46,000, we have to then explore the possibilities to the upside here. Now that doesn't mean that I'm thinking that this is definitely going to happen. So let me just clear everything here now. So my total overall view of this current market since November here, where we topped out at 69, is that we are now in a 12-month bear market, which should culminate at the end of this year with either a sideways action above the $30,000 mark, or just like previous cycles, we may have a capitulation like we did here at the end of 2018, before we started the next round of the 4-year cycle. And that probability, in my perspective, is that 70% we are now in a 12-month bear market. 30%, the probability is that we might just make it above the 46,000, and then the market can surprise and shock everyone by going to the next level and then to the next level. Do I think it's going to happen? No, I do not. I would be very surprised if in 2022 we get above 46,000 again. That's my view. But I'm always open to change and open to the possibility that, but if it happens, then we want to take advantage of that. We don't want to be stubborn and say, no, we're still down here when we're not. It's quite clear that at this point, we've now made a higher high from these points here. So your narrative as emotionally intelligent investors would change to the upside bias. So people ask me, why do I have a bias towards the downside now? Well, very clearly, if you look at the various indicators which give us a good idea as to where we are in a market like this, I always use the 8 EMA, the 8 exponential moving average. And if you look on the larger time frame, the monthly chart here, it's very clear that for the last 4 months now, and we're in the current 4th month here with March, we've been below the 8 EMA. And in previous cycles, we never in a bull market fall below this. And the only time we fall below this is once we have topped out, and then we fall below the 8 EMA. Same here, we were above the 8 EMA until the blow off top. And then once we went below it, that was the beginning of the bear market. So it's quite clear on the large time frame, we're not in a bull market because there's no sign of it here. This is a sign of a bear market. And if we go to the weekly chart, we can see quite clearly that since November here, when we fell below the 8 EMA, we've not closed above the 8 EMA since November. We're in the 4th month now. That is not a sign of a bull market. So it's quite clear we're in a bear run, at least for the last 4 months. I would only expect a continuation of this because this is not a characteristic of a bull market. And if you've been following me on the Twitter, I've just tweeted this morning, that with the price now trying to get above the 40,000, all I would say is be careful because we haven't closed above this, and this is a weekly chart, but we've made 1, 2, 3, 4, and now currently we're making a 5th attempt to get above this. And if we get above this, the level is at around about the 40,000 mark, 39,800, that's around there, then we'll have to look at that perspective in a different way. But currently, we have been rejected at these levels, and we close this candle on Sunday midnight UK time. But just like these, I'm expecting this to be rejected before Sunday. But this is just meant to suck people into the market, take people's money and then do a dump on them. The interesting thing with the weekly chart is that once we fell after the blow off top in December 2017 and the price fell below the 8 EMA, we can see that several attempts were made to close above the 8 EMA, but each time we got these tweezer tops to bring it all the way down. First time here, second time here, third time, and then the fourth time. So during this bear market 2018, there were 4 attempts to go above the 8 EMA, and each time it got shot down. So once again, the current price action resembles more of a bear market than a bull market. And finally, my reasons for being in a 12-month bear market is that on the daily chart, you can see quite clearly the green line here is the 200 daily simple moving average. And the price is well below the 200 moving average here, just like it was over there. So we may say technically we were in a bear market from the top at 64,000, but the market decided to make a second top here at 69,000. And during this period of time, we had 2 death crosses here, one here and one here. And these are not characteristic of a bull market, whether we like it or not. As we can see in the previous cycle after 2018, the price fell below the 200 moving average here. That was after the blow off top and in this bear market. And the death cross occurred after the blow off top. And after the first cycle back in December 2013, the price never went below the 200 during the bull market. It only fell after we had the blow off top. And the death cross here occurred after the blow off top. So all these characteristics on the monthly, the weekly and the daily chart are showing all the signs characteristic of a bear market. So with this kind of thesis, my view is that my strategy has to change to a bear market mode, i.e. every bear market is interspersed with relief rallies like these. And these lend itself to basically swing trades because long-term investment is not on the table because we've already topped out here. So this is what I'm expecting for the next 9 months. We're going to be in this downtrend here. It's going to be interspersed with these relief rallies along the way, and our job is to take advantage of them as swing traders. And these levels here at 46, 52 and 58 is basically plan B in case this narrative, this thesis doesn't play out. But if it does play out, then we have to be ready for it. That's a sensible thing to do. So this is what I was exploring in my previous video. Not that I'm thinking that it's going to go to 58 and 52 and 46, because really the resumption of the bull market only occurs when we break this level here at 69. So for people thinking I've got a bullish bias, they're completely wrong because I have an open-minded bias and I'm ready to act according to both scenarios. Having said that, we must consider lower levels here. There are only 3 lower levels that we have to really be mindful of. The first one is obviously this critical level here at 30,000. It's very likely that we're going to be testing this at least once more. And I'm really 50-50 whether this is the bottom. I would be very happy for the 30,000 to be the bottom here. And the reason why I'm 50-50 is that because we didn't have a blow off top on either of those 2 peaks, that may protect the current market to not go lower than the 30 where we normally have a capitulation at the end of a bear market, just like in the first and the second cycle. So that lack of a blow off top may protect a capitulation not occurring down here. However, we have to be ready for it if it does occur. And there are just 2 levels really to look at, and that's the previous all-time high here at 20,000, which takes into account the top here as well as the price action over here. But failing that, we have to consider this top here at the $13,000, $14,000 mark here. So these are the only 3 levels for the next 9 months to the downside that we must consider. And we have to just take a very simple view of it, just like that. The more you complicate things, the worse it gets. So to the downside, very simple, 30K is a quite probable bottom for the next 9 months, where I would say it's 50-50 that we stay there. However, if we break this level here, 20,000 is the next stop, and then one after that, if we break 20,000, is that 13,000, 14,000. Really, it's that simple. So let's have a look at the current price action and what and what the candle formations are telling us. More excitement going on the 4-hour chart here. And this was the candle I mentioned is going to play a big role in the following price action here. So if you've been following my tweets over the last few days, you'll know that since this spinning top was printed back on the 10th of March, the prices to really watch out for was the price at the top of this wick, which was at 40,300, and the price at the bottom of this wick, which was at 38,560. And I said that there's a higher probability that we're going to close below it rather than above it. So we made an attempt at the top, but we didn't quite get there. However, we made several attempts here, and finally we actually closed below it here. And we dilly-dallied here again to see if we could close below it again, and we managed it one more time. And once again, with this green candle here, we got pushed back into the range again. But currently, you may have noticed, we've now printed a gravestone doji candle here, which has got a long wick at this point here. This happened last night at midnight UK time, and all it's showing is a rejection of higher prices. The range now we've got is the top of the wick is at 47,700 and the bottom of the wick is 38,850. As per before, there's a much higher chance of it closing below this level here at 38,850 than up here. However, as we can see with this doji candle there, many attempts are made to the high side and the low side before eventually breaking down. So I would expect the power of this doji candle will push the price close to these levels here and then down here. So it'll oscillate in between this for now, next few days, before I would expect with a higher degree of probability to break down to the lower side down here. So let's see how it pans out, but this is what I'm expecting for the next few days. So keep these two ranges in mind now for the rest of the week, 41,700 and 38,850. And if we go to the 1 hour chart, last night I tweeted this tweet here, and that is that the 1 hour tweezer top bearish candle formation just closed at the top of the Bollinger Bands. And the short-term target price was 38,800, which is based on the 61.8 Fibonacci retracement. And I did give a lower price target of a 38,250 as the lower Bollinger Band line. And that was the tweet based on this tweezer top here. And we met our first target of 38,850 exactly there. I did say a short-term target because this is a 1 hour chart, and they tend to play out quickly. So this played out within 8 hours last night. But there was a scare the hour before this happened to go all the way up here to the 41,700. So that's basically where we are on the current price action and my overall view. Okay, so we'll leave it there. I hope you found value in this video, and I hope I've cleared up what my thesis and what my narrative is for the next 9 months. And if you did find some value in it, then please do remember to like and subscribe if you haven't already done so, and to turn on the notification bell. If you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.